Doing well. We've had what I would call a slightly net positive week here, it seems, with Bitcoin up just mildly at about 0.8% in the positive, and several altcoins, as we can see, and we will go over, did have some nice runs. There were, of course, a few negatives as well, as there always is. If Bitcoin is around that even range, which plus 0.8% in a week is about relatively even, you're going to see altcoins moving both directions more often than not, and that's certainly what's going on here. But I am seeing more big altcoin runs than usual, especially for many of the flat weeks that we have seen from Bitcoin over the past 3-ish months or so, ever since that ETF run that happened in mid-June that temporarily pushed Bitcoin above 30K. We've kind of seen this ranging effect from Bitcoin where it's fluctuating between that 26K to 28K level in more recent times. Before that, it was in that 28 to 30 range. But I'm at least seeing that a lot of the altcoin bleeding, or heavy bleeding, has slowed down, right? Bitcoin is still having some price dominance, but not to the extent where it was flat. Oh, Balresh let me know that we aren't screen sharing. That's my fault. Nothing has really been shown yet. I was just showing the screener here, so thank you for reminding me, Balresh. Give me a thumbs up in the chat if all can be seen now. But as I was saying, we were having a lot of weeks where Bitcoin was more or less staying even and altcoins were bleeding, right? And at least for the past couple of weeks, that seems to be the case. It doesn't mean that it won't resume at some point, but considering some of the positive factors, it does look like we have hit a bit of a turning point here, at least in terms of altcoins not hemorrhaging the way they were, right? And we see several outliers here. XRP Ledger having a pretty good week at plus 3.5%. Solana right above it at plus 3.7. Toncoin has really been the story. If I move to 30 days here for a moment, look at how Toncoin has just absolutely surged above the rest of the at least top 100 market cap assets at plus 63% now. Maker up 27% in that same time frame. Moving back to the past week, Immutable X was a big story with whales moving a lot of funds from Kraken to Coinbase. A brand new $18 million wallet was created, seemingly out of the blue. We covered that in a recent post. And yeah, overall, it does seem as though there are more success stories than non-success stories. If you're looking at some of the bigger losers of the top 100, we see Sinfin dropping a bit after its pretty nice July and August, at least. I think more August than July. XDC Network dropped a bit. Avalanche, Stellar, after its very good start to September, has started to come back down a bit. And then on the social end, we see that Bitcoin is more or less being talked about at the same rate. A minus 5% difference is really not much in the grand scheme. Tether being talked about a little bit more. So that's notable. Chainlink, I see, having an increase in discussion after, I think it teased at $7 range. And then several that kind of just fluctuated a little bit above and a little bit below. But I think the big story is the fact that Bitcoin is able to creep out a profit over the past week, despite some factors that would historically pull it back a bit. The main thing is the fact that the dollar has crept up. It's up to 106, I believe. Let me check really quick. One moment. Yeah, it's at 105. So either way, it was sitting at 101, 102 for most of the summer. Now it's starting to really creep up, which historically has hurt both crypto and equities. at least since the retrace that started in November of 2021. But that has seemed to have slowed down a bit, and we are not seeing the same impact on prices every time the dollar goes up the way we were. And let's look into that for a moment. I want to show the correlation between crypto and the S&P 500 to give you guys an idea of exactly how things are fluctuating and whether there's some separation. So if I load Bitcoin versus Ethereum versus the S&P versus gold here, we can see Bitcoin here in bright green. The S&P 500 is in teal. Gold is in gold, and that dark green is Ethereum. Let's zoom in a little bit more to just the last 3 months. And yeah, we see this huge drop here that started essentially a day and a half ago. This is when the FOMC made the decision to not adjust interest rates. They stayed firm. However, the dollar has continued to climb, not illustrated here, but it has been growing. And it's down to essentially its lowest level, more or less, over the past 3 months, really matching what we saw at the very end of June. Meanwhile, Bitcoin, yes, it is down over the past 3 months, but it has actually bounced over the last 11-ish days or so. Teasing and getting over 27K just a couple days ago, now back to 26.5, not really much of a drop there. Gold has actually stayed relatively healthy compared to the other two. And it seems as though there is less correlation from what we've gathered between equities and crypto in recent times. If we go way back, if we go back to last year, the big separation was, of course, in November of last year. And most of you know what happened here. This was the big FTX collapse that really set crypto back, got a lot of people fudding up the wazoo and trying to get out at all costs, while the S&P kind of actually rose. The theory being a lot of people from crypto pulled out their investments right here and put it into equities because they were scared straight of having any money in crypto. Regardless of the reason, that was when the S&P and crypto really separated. But then they clicked back in the beginning of 2023. And then this was the moment where crypto kind of made up for a lot of lost time after the amount of pain the traders went through in 2022. Of course, this was the second wave, right? Because we had the first wave in January, but that was with the S&P. This one was just far and above beyond what was going on with equities markets, though. And it kind of had a first, second, and then kind of a mini third wave here as a result of Grayscale and some of the other ETFs. And then this little spike here, I believe, was when Grayscale won its lawsuit against the SEC, and it was allowed to proceed. Of course, the SEC is still fighting things, and there hasn't been a lot of progress since, but overall, it does look like the crypto markets are relying less and less on equities right now, and that's kind of what we want to see. Most bull runs over the course of history have happened when there is no correlation, not negative correlation, not positive correlation, no correlation between crypto and equities. All right, so besides that, let's look at some of the recent highlights. This is something that we're trying to do a little bit more on these calls. Look at some of the big stories over the past week, and then we'll move on to the current market conditions. I want to start right here with the shorts versus longs going on, and we can recap this a little bit in real time because this was posted a couple days ago. But look at how I guess how good of a signal it is to see that there are so many longs going on between late August to early September, and how this correlates with a drop. Yes, we have this big anomaly, and then all of a sudden it drops back down when the Grayscale news comes out. But more often than not, when you see a lot of longs paying shorts, paying a premium in order to ride the price up and leverage trade, that tends to be when liquidations happen and it pushes prices down. On the opposite end, in more recent times, since the past 10 days or so, we've seen a whole lot of shorts and prices have risen pretty much right when they started, right? So this is a telltale sign. If you want to have faith in just one or two indicators, it's never a bad idea for one of them being trading the sort of counter trading the common way that funding rates are moving at any given time. So when they're super long, be a little careful. When they're super short, you can feel more confident than usual. Nothing is a guarantee in crypto, obviously, but more often than not, if you're on the opposing side of extreme funding rates, you're going to do pretty well, given enough time. So that was a big story, and it still is. We're still seeing a lot of shorts, by the way. We'll go over it. We had some big spell token. I won't get too much into the small altcoins just for the sake of making sure to give information that most of you care about on this call. Look at this one, though. Bitcoin wallets holding between basically anything under 100 BTC, they have been climbing pretty consistently and now hold an all-time high. They've been in an all-time high range for quite a while, but now they're really at an all-time high of 41.1% of the supply held. Meanwhile, the 100 to 100K BTC wallets have been dropping, not at an all-time low, the way the red line is at an all-time high, but 0.9% of Bitcoin supply dumped over the past 3.5 months. That's a little concerning from the wallets that kind of control the markets. The red line does not control the markets. These are small to mid-sized wallets, and mid-sized has an asterisk because if we're talking about 50 to 100 BTC, that's several tens of millions of dollars still. But you get the idea. These are non-whale wallets, essentially, the ones that don't quite have enough to move markets on their own, while these do. And we would prefer to see the other way around, where the 100 plus BTC wallets are rising, kind of like what we saw here, right? This was a foreshadow that we might see a bit of a rebound. Even right here, if we go back before this axis started, this was like a mid-sized accumulation here. And then as soon as the big rise happened, that's when they dropped. So look for rises in this teal line. If you find the link that was just posted yesterday, go to the link here and you can follow it along, save it as a template. And when you see this teal line start to climb, that's a positive sign that the key stakeholders that really can control prices moving up or down are starting to get more interested in moving the markets up. Let's see. I actually wanted to hit one more over here. This one. So we've seen a lot of address activity in recent weeks. The theory from a lot of people is that both Bitcoin and Ethereum had huge upticks in address activity due to the fact that liquidations were able to commence for the FTX exchange. And obviously, as they start to sell off their assets, they're going to be moving into a lot of mini wallets, moving out of huge wallets, and that's going to create a whole lot more addresses interacting on the network all of a sudden. It doesn't mean it's going to be permanent, but it at least means that dormant tokens are being taken out of these stale, stagnant wallets that have been just sitting there for the past 10 months and starting to circulate back into the crypto ecosystem. And that's usually a good thing. When we see more utility, whether it's because prices are going down, prices are going up, or just an anomaly event like a massive former exchange is getting liquidated, it's usually a good thing because it gives traders and investors the opportunity to start moving assets that had previously been unavailable. We can also see there was this purple spike here indicating the largest instance of dormant Bitcoin activity in a couple months here since late July. Sometimes there's a big price swing when these happen. Sometimes there's not. In this case, it looks like this actually kind of signaled the top because, as you can see, 3 days ago, this was when it was at 27.1K. However, this top should not be considered a long-term top. It may have just signaled a very short-term correction, and we need to analyze more information in order to get a clearer picture of whether something like this is a very short-term top or something that can have more legs to it. All right, so those are some of the highlights from our tweets over the past week. I also wanted to look at our insights for a moment. We had our mid-month report. I'll give you guys a quick glimpse whether you're Sandbase Pro members or not. If you're here on our call with us, we want to reward you by giving some of the information that we discussed there that normally is only really read by our pro users. We talked about some of the projects that are continuing to see very high development activity. If you've been on some of our previous calls or read our insights, we like projects that are continuing to churn out, innovation, improvements, even if it's just effort to improve and become a better asset with improved technology as our world continues to develop. That's generally a good sign, particularly when markets are down, right? Plenty of teams will get more motivated and have increased effort when the market cap of their asset is rising. But assets like these that are on the top 10 and seeing anywhere between 250 to 570 notable GitHub submissions every day, that's a pretty good sign that these assets are here to stay, and they're really trying to become a viable asset that many people are interested in using for years to come. Notably, we can see Polkadot and Kusama back on top. A month ago, Cardano actually flip-flopped them, and it was in the #1 spot. Not really a race by any means, but whether you're a Cardano maxi or you're just interested in seeing what the most definitive notable developed asset is out there, the shared GitHub repository of Polkadot and Kusama are back in the lead. Also notably, Chainlink is at #4 now. Hedera, Vega, Status, Cosmos, Internet Computer, and Filecoin round out the top 10. And I thought it would be cool to actually visualize over the last 3 years how they look. You can see Chainlink here, just over the past month or so, has had a notable climb itself. Polkadot and Kusama have pretty wide swings. Look at Cardano continuing to climb. I mean, the commonality between these 10 projects, maybe with the exception of Filecoin, which is a little bit lower than 3 years ago, they tend to rise as time goes on. And this isn't just total GitHub submissions. This is daily submissions for each one of these intervals, showing that the rate in which they're trying to develop is increasing over time. That's a pretty good sign. And if we go back to this slide, it's no coincidence that you see the market cap ranks mainly in the top 35-ish or so here. Obviously a few exceptions, but these are not just obscure, with maybe the exception of Vega, which is at 314. They're not just obscure, barely talked about assets. These are assets with giant followings, giant market caps, established reputations. And it isn't those established reputations that make them want to develop. It's the other way around. They work on development, and as a result of good technology and innovations to the crypto space, they get those established reputations. So I was happy about this article, and I hope you guys get a little bit out of it. And just as a reminder, if you have not checked this out, we have an oldie but goodie article here that talks about how we track our development activity, why it's so important to us, and why it goes just beyond counting the amount of GitHub submissions. We really filter for only things that are notable in order to really see between the lines which projects should be, considered a trustable asset out there. All right. So we talked screener, we talked tweets, we talked insights over the past week. Oh, as promised, I will get to the mid-month report really quick. Go back there. All right, so we talked a little bit about price. We can skip past that. We had a little bit of FUD earlier this week from Watcher Guru, who's a widely respected Twitter handle that gives a lot of news, and they reported that the SEC found their audit of Binance US to be hard to ensure the company was fully collateralized. In other words, we're not sure we can trust them, therefore you shouldn't either. That's essentially what the SEC was communicating. Personally, I actually thought this would have more of an effect on the markets, but perhaps the mainstream crowd is so used to seeing this kind of news by now that it's almost as though we have kind of this numb reaction. It did gain traction, absolutely, and people were talking about it. But for one thing, Binance US is not Binance. There is a difference, and I think that in this case we have to take into account that the SEC has had a lot of objections that have not actually made a difference. Grayscale being a good example, and we are aware, especially here in the U.S., that crypto trading is not the most welcomed thing out there already. But regardless, this did cause a minor amount of FUD, and it kind of was forgotten about within a couple of days, at least from the social mentions related to it. And then speaking of social mentions, we can see some of the key things that were talked about. Obviously, the CPI and inflation were big talking points a couple of weeks ago, or I shouldn't say a couple of weeks ago, about 1 week ago when the CPI report came out, indicating that jobs reports were actually a little bit better than what was projected. So that was good, and we actually got a little bit of a boost from that ever since. That was pretty much right after the local bottom hit. We can also see bull market and bear market are both rising. What does that mean? It means there's more polarized discussions and interest on both ends. People are getting more vocal, and it doesn't necessarily mean that the markets have picked up significantly. They've essentially been flat as we went over, but people are becoming more interested. The halving is about 6 months away now, and closing in fast. And we have things like the CPI report last week and the FOMC deciding not to raise interest rates just a couple of days ago. That's getting people talking about crypto a little bit more. We can also see the dollar is pretty flat at the moment, even though it's been rising. So I wouldn't be surprised if the dollar continues to rise to see social volume start to pick up right here. Also interesting that AI saw this huge spike as well. Since this is about a week old, I'm just seeing if there's anything before we get into the real-time charts here. Anomaly Finder. We'll show a live look at that. I preloaded it before this call started. Okay, yeah, let's go to some of the real-time metrics. So we're not looking at 6-day-old or 5-day-old data. So looking at Bitcoin's on-chain and social metrics now, what are we seeing at the moment? So for starters, transaction volume hasn't made much downswing here, where we can clearly see there is less transaction volume happening over time. Not really the end of the world. It does help when we're seeing something a little more like this with transaction volume, because it can lead to price rises like that on any given moment. But less transaction volume isn't the end of the world. It does mean that the network is not quite seeing a justified level to indicate that it's flourishing, right? So that's a bit of a concern. trading volume outside of a few recent spikes over the last 3.5 days. Nothing too crazy going on. Daily active addresses and circulation. We talked about how we started to see some big spikes. It's even more notable on the Ethereum network. We'll see if we have time to go over some ETH stuff. But on the Bitcoin side, a few big spikes. Oh, you know what? Hold on. I apologize. It looks like data wasn't fully up to date. Check really back here really quick, and I don't see any difference. Yeah, transaction volume is still dropping. So my point stands there. This makes more sense because we have started to see a big increase in daily active addresses. It's still bigger on the Ethereum network, by the way, but now you can see a clear picture of the last 2 weeks, really. Daily active addresses being consistently above 1 million per day, and it hasn't slowed down. So this is a great sign, in my opinion. I think in most cases, we need to see a rise like this, whether it's due to prices dropping or rising or a news event. More unique addresses circulating indicates more activity, more buys and sells, whether on exchanges or somewhere on the dark web, it doesn't matter. More daily active addresses tends to be a positive for the network. And when it's for Bitcoin, that can be a positive for all of crypto. That's why we spend so much time here specifically looking at Bitcoin. Circulation not really moving. It's still quite low compared to the current market cap. So that is something we have to be aware of. MVRV, one of our most, maybe to some people, the most important metric in terms of mid and long-term trading. 30-day average trading returns are a little bit above even, plus 1.2%, and the 365-day is at plus 7.7% now. Neither one are in extreme ranges. We would still prefer to see, both of the MVRVs, the 30 and 365-day MVRV, to be in the negative range, as that would indicate that traders are well below water, and there is an increased likelihood that there is a price bump in order to get them out of being underwater and have the average trading returns return to their normal resting rate of about 0%, as is the case for all time frames. Funding rate, we already went over that. We did see this positive spike yesterday, but it's kind of neutralized out. I still like the long-term trend of all of these here to make it, because we're overlapping them. The BUSD is not as important as USDT. BitMEX doesn't need to be shown here. Just look at the USDT for Binance and Deribit funding rates right here. And we do see that it was shorted here, started to get some longs, and now it's neutral. I still think we're going to see some more shorts, especially if we start to drop toward the low 26K range, and that would be a good sign. If we don't see shorts and prices drop a little bit more, that's a little bit concerning. That means people might be buying the dip and greedily trying to try and call the bottom. Whale transactions, not much here. It looks like 100K plus transactions and $1 million plus transactions both continue to decline. Not a big deal. It simply means whales are biding their time, waiting for an event or a certain price threshold that is going to be more interesting to them. I'll get to the tier breakdown in a moment. I'll get to the ratio of profit to loss in a moment as well. Mean dollar invested age, not really showing any dormant activity. The average age in which Bitcoin is sitting in addresses is up to 626 days. That is an all-time high. Eventually, there will be an event that will start to flatten out this curve or start to drop. And that would be a good sign that dormant movement is starting up once again, and there's an increased likelihood of price rises. So put this on one of your alerts if you haven't already. Remember that alerts can be sent to your Telegram or your email, or even push notifications via text, I believe. You can check that out. I've never tried the text one, but Telegram and email works fantastic. Not much in any direction for slight positive spikes here, but nothing serious in terms of realized profit loss spikes. I do think these mild ones are a little interesting because they did call the top well. Generally, it's like MVRV. Positive spikes indicate there's an increased likelihood of a top coming. Negative spikes, as we saw here right before the rise, project a more likely scenario of a future rise. In terms of supply and exchanges, it's continuing to stay low. That's great to see. Yeah, I mean, this isn't really anything special. All we can say that is that down at 5.84%, there is very little BTC to be further sold on exchanges. And when it's being kept off exchanges and cold wallets, at the very least, there's a limitation on a massive sell-off going on. The other side of the coin is the fact that if they're all in cold wallets, it means there's less circulation going on, as we saw above. Social volume and dominance, nothing much. It's actually, I mean, we've seen a little bit of a decrease since late August for the discussions related to Bitcoin. That's not the greatest sign. We would prefer more discussion on BTC because that is kind of the relative safe haven that people flock to when they're fearful. If they're not talking about Bitcoin, it usually means they're more interested in the new kid on the block, the asset that is getting a lot of, crazy volatility, pumps, dumps, things that people want to gamble on more. And that's a signal of greed. Either way, this is not a steep drop. It's pretty much in just a neutral area right now, just not showing as much fear from the crowd as we saw 3-4 weeks ago. Weighted sentiment also about even at the moment. All right, let me show you the ratio of transactions in profit to loss here. So what do we see? We had a big week of profit taking leading up to the correction that started on the 19th. That makes a lot of sense. We had loss taking in the first 2 weeks of September, and that signaled that a bottom was likely forming. All of a sudden, we get profit taking, large profit taking. I mean, Bitcoin, this was actually, it about matched what we saw here in late June, which was around the top, that local top, when it was above 30K. So this is a great signal, in my opinion, and something I continue to use for my own analysis when I put together insights for the community. And when it started to go negative, that's an increased signal that we are close to a bottom. So all makes sense here. To start the week, just over the past, I think, 36 hours or so since this new candle started, look at how they're all in the negative again. This is actually a good short-term signal. Now, note that it's a small sample size because we're only looking at about a day and a half of data thus far, but all things considered, this indicates that there might be some minor capitulation going on that you can take advantage of for maybe 1 to 3 days, and then we see how this this signal looks at the end of the weekend going into next week. All right, now let's look at the whale tiers as promised. Okay. And then after this, I've got some stablecoin analysis as promised in the title. So in terms of the amount of BTC being held by 10 to 10,000 BTC addresses, that essentially is like the sharks and the whales. We can see that it's really barely moved, and this kind of reflects the low amount of whale transactions we looked at. It's still sitting at about 66.8%, just over 2/3 of the entire supply of Bitcoin is being held by 10 to 10K BTC wallets. Not really a big deal. If I highlight this, you can see how, when they really start to accumulate, that's when you see these big rises. When they start to drop, that's when you start to see a drop. What I love about looking at this line is it usually gives time to react. It's not instantaneous. it has some alpha to it where you're able to see ahead of time that a bullish or bearish divergence is showing, and then you can react accordingly. As of right now, not really moving in either direction. So not much you can really do about it until more information from these sharks and whales are given, and there will be more, I can guarantee you that. Tether, you can see that they are starting to show signs of accumulation again. These are sharks and whales holding $100,000 to $10 million in Tether. And yeah, ever since August 20th, really, they were holding 36.9% and got all the way up to 37.4%. Modest rise, still a long way to go to get to where they were back here. But all things considered, I like that it's at least moving back in the right direction. USD coin not really moving. BUSD, look at how they continue to accumulate a lot of BUSD. I find this interesting. Granted, they hold 7.6% compared to 37.5% of Tether, right? So even though this looks high, they're not on the same axes. This is what it looks like if they were on the same axes, and it's still way down here. But I still like to see that BUSD is moving up and DAI is still moving up, and then lesser of importance, True USD and USDP. TUSD is moving down. USDP is kind of in mid-range right now. Let me see if there's anything else here. All right, let me move on to what I really wanted to show. So this is a relatively new metric, and there's still some clarification needed from the team on the precise definition. But in short, what we're looking at here is the percentage of stable coins overall across multiple stable coins, I know that are being held by whale wallets with at least $5 million in them. Now, the clarification I need is whether the $5 million is comprised solely of stable coins or whether it's just calculating any wallet that has a combined $5 million with Bitcoin and Ethereum and Tether and, you know, obscure coins, all of those things. And I don't know if it's calculated that way, but I don't think that's a serious clarification that's needed in order to still show how important this metric is. What we can tell you is that these are very large wallets, and it shows the percentage of the total supply of stable coins being held by them. So overall, you can see a very obvious price correlation. Let me change the color so it isn't blending so much with the red candles in price. Let's just go, there we go. Okay, so look at just the last 6 months here. You can clearly see when they are accumulating stable coins, aka adding buying power, prices tend to follow for Bitcoin and obviously by proxy the rest of the assets in crypto. And when they drop, even these very short-term drops tend to have an effect on the price of Bitcoin as well. They rise up again. Now, like this is like why I like this signal so much. You can see that the percentage of stable coins held by them was clearly moving up between April and June, while the price was going like this. That's a bullish divergence. And when there's a bullish divergence, you eventually see something like this happen to even things out. So I think there's a lot of alpha here. Let's zoom out a little more so I can give a little more context. I mean, it's pretty definitive, right? When prices are moving up and stable coins are moving down, it eventually leads to a big drop. When they're both moving up together, makes sense. It's a neutral divergence. It kind of moved up together all the way here. And then you saw this bullish divergence once again. As of now, we see that the percentage of stable coins has been dropping from these whale wallets, but not a serious drop, right? Because we look at the past year, they were holding at their lowest 43.4%. They're still up at 51.2. So more than half of the total stablecoin supply held by whales with at least $5 million of mystery coins for now They are holding steady, essentially, just not quite as much as they were holding when things were really good going into the ETF announcements, which I would not be surprised if a lot of these whales knew about the grayscale and other ETF explosions that would come out in mid-June, just about a week after they peaked in their accumulation. So this is a default metric, by the way. So you can just type in, like I did, type the word 5 with an M after it, and you'll see this pop right up. Percent of stablecoin total supply held by whales with more than 5 million USD. Save it as a template, combine it with other things, totally up to you. But this is quickly becoming one of my go-to metrics when I analyze, the midterm likely outcomes for where prices are moving next. All right. Let's see here. We had that, we covered that. These were some of the assets we covered from last week. Let's look at social trends for a moment. Okay, so looking at some of the short-term keywords right now, what are we seeing? We see the #1 keyword being the word sensor, and our AI summary indicates that it's trending due to its association with ISO mining boost. So sensor token is being talked about a lot with it. I wouldn't be surprised to see sensor token as a trending asset when we check those out in just a moment. This is related to sensor. You can see ISO as a keyword with sensor, and sensor here as a keyword with ISO. We see epoch, miner, fuel. Yeah, basically all of the top 5 keywords are related to the same thing. I don't know enough about it right now to give you a full landscape of it, but it's clearly being discussed. Let's just open up to see which platform it's being talked about. Yeah, you see the social volume just exploding for it. Telegram, yeah, this is responsible due to the Telegram discussions going on revolving around it. So that gives you a little extra context. Besides that, I do see that Ethereum is the #8 trending keyword. It's being mentioned in discussions about buying and selling altcoins, as well as its potential for short-term gains compared to BTC. Users are tired of altcoins and focusing only on BTC and ETH. Okay, so this is kind of a price play that the crowd is talking about a little bit more. Yeah, we can see that the social volume has been rising for some time, and very gradually so. So Ethereum is starting to get a lot more attention. Reddit especially, it looks like where the climb is kind of at the epicenter in. But that's interesting to see as well. Let's see here. Back to social trends. We touched on the midterm trends in the article that we posted. Yeah, in a live look at how this big bear market spike just popped up today. This is a good sign. When we see a big spike in bear market mentions and no spike in bull market, obviously those social volume candles are moving down, and all of a sudden we have this big upswing in bear market. That's an indication that the crowd is starting to turn a bit negative, with more discussions related to whether we are currently in or are soon to be in a bear market. Everyone has their own definition, but generally more mentions of the word bull or more mentions of the word bear will indicate whether people are positive or negative. All right, trending tokens as promised. IMX is currently the top trending asset with the highest percentage gain in discussion rate because it is mentioned in the text about the FameX Global Agent Program, where users can become agents and earn up to 2,000 USDT per month. So this does appear to be the benefactor of a marketing campaign by FameX Global. Ethereum, not surprising, as we saw in the keywords, it's the #2 trending asset, and it appears related to trading strategy. Tether, interestingly, at the #3 spot. That's always important to see. It's expanding its mining, it's expanding into mining Bitcoin in Europe. The company is also invested in Northern Data and is reneged on its promise not to issue new loans. I don't think I know enough to give added information on that. And then to round out, just to see if there are any notable ones, Monero, obviously a large cap, and that is being discussed. It tends to pop up anytime people are talking more about privacy coins, extra privacy features such as ring signatures stuff. So yeah, it sounds like this is a discussion relating to Monero's ability to stay more private than you would with almost any other asset in cryptocurrency. And by the way, I want to mention, guys, we are still rounding out our positive, neutral, and negative sentiment. And we are using an older algorithm I've learned to calculate these. So please give a little bit more time. We'll announce when we have improved our rating system for what is considered to be a positive, neutral, or negative comment about an asset. Doesn't mean it is meaningless now, but it means that we are actively trying to improve it to make it more accurate. So take it with a grain of salt for now. All right. Let's see if this is loaded really quick. This is just a MVRV look. It looks like most altcoins here are still semi-underbought. Gala, Serum, Magic Token, and ApeCoin are the assets that appear to be most underbought when looking at assets on the Binance exchange right now, in terms of ones that we have available data on, because they are ERC20s. And then on the Anomaly Finder, if you weren't on our call last week, this is where I introduced it. And I still am finding more and more use cases for this. It's a really great tool. And if you haven't downloaded it yet, ask us in our Discord or even just in the YouTube comments here how you can get it. We'll drop you a link and give you a quick explanation. But essentially, if you're an altcoiner and you're trying to find which opportunities for assets are out there, this is probably step one, to get one page without any scrolling, all the information you need on which ones are kind of hotbeds for a lot of anomalous activity at any given moment. We can see VitDAO is as of yesterday, so it's going to show the latest full day of data. So if you're looking at our current day, it's not a full day yet. So something like a daily active address anomaly, we don't want to include that because we've only had half of a day go by so far. A little more, like 55% of a day according to UTC time. So this is showing the latest full day, which was September 21st, Thursday. And VitDAO had, I know it's a little small on your screens, but we can see that this was a big anomaly in whale transactions and age consumed. So that's something you can take into account when you see those green dots. Super Farm, a whole bunch of green dots. Active addresses, it had a huge high. Network growth, whale transactions, and age consumed. Loom network a couple days ago, that's a huge one. Almost every metric had an anomaly. I want to look at that really quick based on what we're seeing. So if we go to our main template, what is going on with Loom? Oh yeah, so as expected, Loom is seeing a huge price surge and it's resulting in crazy network activity. So Loom, if we look since, let's say 2 weeks ago, September 8th until now, price has almost tripled, up at plus 178%. Massive trading volume, massive transaction volume, huge highs. I wouldn't be surprised if some of these are all-time highs, but I won't investigate that for the sake of time. Daily active addresses, MVRV is going nuts. Whale transactions, this is interesting especially. So whale transactions here, we saw it kind of on the lower end of this huge pump. So this likely means that there were some big whales accumulating. And if you were using the Anomaly Finder, right at the end of that day, you'd be able to see all of these going off. And considering they're all positive spikes, that might indicate to you that there was a bigger pump coming as the pump was just getting started. So we had this huge spike in $1 million plus transactions. I'm trying to get a little more granular here. Let's say we look at just an hour and we change the price to an hour. Kind of hard to see. Let's just look at the last month on its own. There we go. Yeah, so got an hour or two. Look at all these whale transaction spikes that kind of just started right here. It looks like they knew something was coming. I don't know if anyone predicted that it would almost triple in price, but if we go down here and we look at price being at about 10 cents, so let's say we look at starting at 100K to 1 million. Look at the accumulation that they suddenly did from the 20th until now. Same with the million to 10 million Loom addresses. Same with the 10 to 100 million. Going even further, okay, this is where you get into exchange addresses, so that makes sense. But these three key tiers are likely the key stakeholders that can move prices up and down. And thanks to the Anomaly Finder, if you saw those spikes on that day, you would have had a pretty nice alert on your hands that something good was likely coming for Loom. If I can even find it, here we go. Put them in bars, make them a little darker. So yeah, I mean, all of this accumulation, you can see it really started with the 1 million to 10 million addresses right here, right as the coin started to pump. And then it was kind of a domino effect where the larger wallets added on and suddenly accumulated a lot more. If we just combine them to make it easy, merge, 1, 2, 3, hit confirm, control click that, so it's the only one showing. Look at that. I mean, the accumulation was just massive all of a sudden. They went from holding 18.2% of the supply to now 25.4%. So when you see whale transactions on the Anomaly Finder, the first thing you should think is, well, are whales transacting for the purpose of accumulating or transacting for the purpose of dumping? And beginning between the 19th and 20th, the holders that had anywhere between about 10 grand to I think $1 million, 10 grand to $10 million, excuse me. That's those wallets just started to load up right here. And that was a great sign that something positive was coming for Loom. You don't always need to see just greens across the board here for MVRV active addresses, network growth, whale transactions, social dominance, ratio profit to loss, exchange balance, and age destroyed. But like when you see a lot of them all in one day, like mask here even, that's a sign. Spell token a few days ago, they went on a huge pump on the 19th as all these green dots were forming. STPT toward the beginning of the week, we actually made a post about it. Tons of green dots. I think this is a game changer. And just to give you a sneak preview, since I make these models on my own, like I put a separate tab together in case you don't want to just look at anomalies. You can also look at it in terms of just overall, if it's tending to see a lot of high spikes in some of its key metrics or low spikes compared in its key metrics compared to usual. It's looking at the past 90 days. These are obviously incomplete, these bottom 3 rows, but everything else here is complete. So like looking at Aave, for example, lots of green, but maybe they're not anomalies, right? So if we look at Aave and then compare to anomalies, yeah, it has 0 anomalies, right? But without just looking at the very top or the bottom, you can see that there still is a tendency for a lot of its on-chain metrics to be very high right now. And that's a good sign indicating that the network is active. Which other ones are popping out with a lot of green? Well, Alchemix, for example, Dogelon, which was the #1 trending asset a couple days ago. Lever is getting a lot of green. These are all just eyeballs. And maybe you want to look at one that is very inactive right now. I immediately see Pepe with a ton of red and orange, meaning it's particularly not active compared to its average over the past 3 months. I eat this stuff up, and I'm super passionate about like trying to find ways to visualize data in the most efficient, helpful way possible. So by all means, if the way that I like to make sense of an asset with one quick glimpse is not the way you like it, give me suggestions, give me ideas on how I can make this even better. And I'm receptive. If a community member pops out and says, you know, I can't read this, it needs to be formatted in a different way, that's my job, is to make sure your ability to use our metrics is easy and efficient and quite frankly fun. So by all means, let me know what you think of this, guys, because I want to make it a perfect product for you all. All right, that said, I didn't even ask for asset requests. Do we have one quick one, Balresh? I could go over one. Perfect. Yeah, Maker's a good ERC20 we can look at really quick. And Maker has been on a nice run over the past week, past month even. I think it's up like almost 30% in the past month. Let's see what we got here. So over the past 6 months, trading volume starting to make a rebound makes sense. Generally, we want to see a rising volume as prices go up. If it starts to drop as prices rise, that could be a signal that a top is forming, and that's kind of what's happened over the last couple of days. So be a little concerned. It isn't a huge drop off, you know, like this one was a little bit bigger of a drop off. But watch it, I mean, today and tomorrow might be very telling. If trading volume starts to go up again, that would be a good sign that we might rebound. But note when it is going up too. So if like prices are dropping a lot and you start seeing trading volume go up, that means there is more interest in the direction of that price, and it is more likely to continue. So if you start to see a little bit of an attempt for Maker to go back above 1300 and then trading volume goes up, that's a sign that there is interest and volume going into that trend, making that trend more likely to continue, if that makes sense. Daily active addresses, not really a huge bump relative to just how much the network has been growing in market cap. Same with circulation. So not too much to be excited about there. MVRV, this is concerning for sure. As you would expect when an asset is pumping, especially independently from the rest of the markets, the 30-day MVRV is way up there at plus 14%. Not quite in a danger zone, but pretty close. Let me see on here really quick for our MVRV model. Yeah, Maker, when combining all timeframes, short, mid, and long-term traders, it does look like it's showing overbought, but not quite in that danger zone, which is marked here. So compared to something like Merit or Bluezell, which have had huge pumps, Maker is not quite as dangerous, but you can see that it is the fourth most overbought according to this model, which has to be a concern when it comes to MVRV. Let's see what else. Funding rate, really not much. Maker, I mean, it's always kind of been a little bit under the radar and doesn't get as many leveraged traders as you would expect from an asset that's ranked in the top 40 in terms of market cap. Whale transactions, let's zoom in here a little bit more. Not really much of anything. I'm not seeing any notable movement from Maker's whales at the moment. Not really a good or bad thing, but we can still look at the context here. Maker's price is a little, about 1300, just under. So we want to start looking at addresses. 13, yeah, about at 100 to 1,000, 1,000 to 10,000, and 10,000 to 100,000 Maker. addresses. When it comes to price, we'll drop that here. Yeah, I'm not really seeing any crazy momentum. 100 to 1,000 has actually been going down. These are a little more important. Yeah, I mean, the 1,000 to 10,000, that's a good sign here that it's been moving up for a while. But the largest blue, 10,000, 100,000, not really moving in either direction. If we merge them all together, it's pretty flat. So whales aren't really moving either direction, meaning it's kind of up to the smaller traders as to whether they want to keep this rally going or not. And I think our best bet is to continue keeping an eye on trading volume and MVRV. I would like to see the MVRV come down a bit, as you know, this is a concern with the mid and long term trading results being so overbought. But I still think that trading volume might be the thing to watch right now, because if it can continue upwards, as prices are trying to climb, that would be a positive sign that it'll go to, you know, zoom past 1,300 and maybe you can get to 14 or 15. But yeah, I think that's a wrap, folks. Thank you for the maker recommendation. It's an asset that I know Maxim likes to check. We've talked about it on a month ago. So thank you all for tuning in. Let's keep our eyes on the market as we get into the final quarter, 2023 here in about a week and a half. And, you know, 6 months until the Bitcoin halving, things are definitely going to get juicy. So we'll keep you updated with all of the news and the metrics that are showing anomalies. And for now, stay safe. Have a wonderful weekend. Thank you to Balresh, to the rest of the Santiment team that are currently on the other side of the world in Malaysia right now. So feel free to drop them a message, and maybe they can even share some pictures. Talk to you all soon. Be safe. Talk later.